Cluster trade levels. Last week we saw some of the biggest transactions that we've ever seen from an algorithm. This week we face off at the exact same zone. So what should we be paying attention to as traders and investors? In today's video we talk about the island reversal on the S&P 500, the idea that credit default swaps are now becoming a concern in the future, and how that's leading big players to start to look at alternative assets. Could it be the time of silver is just about to come? There's a lot to break down, and there's some huge breakouts that we want to discuss in today's video together, including the massive options flows. Tesla just broke a big call wall. Why was that? Let's take a look right now together, guys. This one's not to be missed. We'll see you in a moment. Well, welcome back, everybody, to a sea of green as Trump pauses the EU tariffs and markets, of course, rally back up to their key levels. My name's Tom, and in today's video, we have a lot to discuss, including the latest macro, the data, and of course, the options flow. But let's kick things off with, of course, the credit default swaps, and they're spiking again here in 2025. And as many of you will remember, this has been a bit of a cautionary tale for the future of markets. Not so much what's going on right now, but the future could be less certain. Why do we need to pay attention to this? Well, listen to some of these stats. In 2007 and 2008, we saw credit default swaps surge in mid-07. The S&P 500 peaked soon after, and a 40% drawdown occurred after that. In 2011, we had a Eurozone debt crisis where US CDs jumped with total contagion fears. The S&P 500 then proceeded to drop after making a new peak, 15% in the next 6 months. Then the Fed launched Operation Twist. So we've seen this a couple of times throughout the last 15 years, but will it become a concern again in the future with some of the largest amounts of treasuries ever recorded needing to be refinanced? Well, of course, a lot of people are looking at the Bank of Japan, and specifically, they're looking at the Bank of Japan maybe starting to sell US treasuries and move into what has already been an illiquid market, which is the fact that they own their own government bonds. Have a look at this. 52% of the Bank of Japan, it owns basically the government bonds. And we can see here that illiquidity is becoming a concern again, as liquidity in JGBs, so that's government bonds from Japan itself, have now spiked to levels that we haven't seen since the Lehman Brothers. So there are credit concerns happening here in the markets, guys, and of course we need to be paying attention to them. But what about the most recent price action? What's going on here? Well, as Trump removes the EU tariffs for now and puts pauses on them, we obviously have seen this game before. Trump puts in a big number, he reduces that number or even pauses it, and then the market goes up, basically bouncing off those levels. And each time, as you'll notice, that Trump puts on these larger tariffs on some of the biggest trade partners in the world, the market's reaction to the downside is less and less. And that's because basically no one's taking it that seriously anymore in terms of lasting for a long period of time. It's one of those classic case scenarios that we've seen this before, so we probably know how it's going to play again. But what about these cluster trades? What about these rare positions that we don't often see at a key resistance? Well, as it turns out, we just hit the cluster again over the last 24 hours, and we started to see a couple of transactions come in near the close for the triple Qs. And of course, the NASDAQ is the most important market to be watching right now, as it's leading this recovery with semiconductors and technology stocks being the kind of forefront of this, including one of the ones we like right now, which is of course Google, doing well over the last 24 hours. So with a bounce back up to this level, do we expect some form of resistance? Well, we'll look at that later on, but we did see a couple of large trades. Specifically, we saw a large trade and a dark pool sweep at that come through one of the large MAG funds. This is MAGS, the Round Hill Magnificent 7 ETF, and there was a large dark pool sweep right at the close that came in. Now, it doesn't necessarily mean that it's a sell, but obviously we've seen these at inflection points several times. We saw it after that huge buy that led to a sell-off. We saw it at the peak back in December of 2024. And of course, we saw it as a big purchase back in April during the crisis period that happened then. So could this be a turning point for the markets? Have we hit a cluster? We are now at the most important resistance level. And if this level is broken, it could be that markets are about to make an all-time high. Now, why are markets going up? Well, a lot of it has to do with, of course, the investor wall of worry. We often talk about sentiment on this channel, and we know that nobody has been more bearish than 2008, literally the points of the worst part of the global financial crisis, than what we've seen during this tariff kind of discussion. Now, the markets obviously changed a little while ago and started to bounce back up, but we continue to see this red period of time, basically where equity ETF flows are showing markets selling into that rally. Effectively, there are people selling the rips, and at the moment, the dips are being purchased, at least from what the previous notes we've had, by retail traders. People like you and I seem to be buying the most. And this has happened a few times. 2020, it happened where retail got the bottom, and then, of course, Wall Street had to stuff the kind of levels around here to try to get back into that rally and start leveraging up. And we saw something similar happen here in 2022 into 23, where we got a lot of retail trying to buy the dip the whole way down. Ultimately, of course, that was correct. And then we saw a couple of pullbacks to this area. So what are we facing off right now? In most markets, last week, we would have pushed towards the 5,600, 5,660 level. But this market is a little bit different, driven in many ways by tweets that are obviously pushing markets up and down very quickly based on tariffs themselves. Well, based on what we're noticing here from China, it could be that China is not suffering as badly as people expected in terms of overall new customers. China's exports are actually now at an all-time high, while obviously the trend continues here when it comes to Chinese exports to the US, which have already been dropping for quite some period of time and continue to, of course, drop off as the tariffs have taken, some dent out of this market. In terms of where people are going, where are we seeing the flows move in the markets? Well, most flows seem to be going into alt assets, Bitcoin, gold, and silver. The holy trinity of alt assets, it seems, at this stage. And central banks have been at the forefront of buying gold. Are they now starting to become the forefront of buying silver, though? As we suggested in our weekend video, it looks like CTAs, which are momentum-based trade funds, are starting to play catch-up on silver. And this helps with that silver-gold ratio kind of concept. What about cyclical stocks? Are they continuing to do well? Well, it turns out, yes, they are. We saw, of course, a switch on this last week, which we've been documenting, which was a defensive switch at the top of those markets that then sold off into 57.50 on the S&P 500, reversed by Trump putting a pause on tariffs. But you'll see the overwhelming part of this rally so far has been led by cyclical stocks, including technology and semiconductors. And it makes us wonder, are we more in this part of the market? That is a similar narrative to the tech boom, where markets kind of rally up and then they start to find, some problems. I would think we're more in this kind of component here, or even this kind of component here, nearer to the end. And the reason why I say that is because of the nature of, firstly, the aggressiveness of the market. Secondly, the aggressiveness of the V-shaped recovery, and the fact that we are climbing the wall of worry, but this time with credit default swaps going up. And that's never been really a great sign. What do you think in the comments down below, though? Are we following a similar path? Are we also following the first 100 days and beyond of some of the bigger reformers in terms of presidents, where we see something happen between 200 and 250 days? This is another pretty big overlay that we're seeing at this stage. And of course, we always like to bring overlays into our discussion. And it's important because correlation can be used as a partial predictive power, along with, of course, flow breaks. This week, really, it's about one thing: Nvidia earnings. Wednesday after the close, we're going to find out what's happening with the most important stock in the world and whether it's continuing to see and, of course, justify massive gains. Remember, the options market is proofing in at around an 8 to 9% movement in terms of options flow, and that's going to be something very important for all of us to watch. We will be doing a special on Nvidia on our next video, so make sure to subscribe for that. Central bank liquidity increasing across the board, but really the big increase that we've seen over the last couple of days has been from the PBOC. China has started to liquidity inject, more on that coming in, and that could be a pretty good sign for things like HSI as well in the future. But will we get any of these gaps filled? We just saw an island reversal back for the S&P 500 as it continues on its way up. It hit the daily 20 which is, of course, a major level. It also hit the daily 200, which is around this zone. And this has people wondering, is that all we're going to get? Is that the biggest sell-off that we're going to get here in the markets during this, what has been a pretty much V-shaped rally? Well, it really comes back down to a lot of these tweets, but we do need to remember that around this 59.50 level, we've also got a bunch of options. So let's take a look here at the futures market. These are the updated options levels in terms of the day moves, expectations. You can see the resistance or high is on the options high level. This current resistance sitting around 59.20 is an interesting zone. We managed to bust through this 58.80, which suggests that now pullbacks will be met by bull demand and that it's going to be very difficult to get into the 5600, 5660 level. And of course, options lows currently on the demand support. But let's have a look at the actual options call walls themselves. 59.50. It remains a massive call level throughout the rest of this week. And you can see here, it continues to come up along with 5900, which is the main two. Now, if we break through 59.50, you've got to think markets are going to start rallying pretty hard. But for now, this is still a call wall resistance. And it seems to be prevalent here in the Qs as well, where we closed at 521. And you may notice that between 520 and 530, there are a ton of calls. Now, we often don't bother looking at the Qs because we find the S&P 500 options flow is better. But there are clearly some signs here of some massive options that are all around this resistance level. So what this is going to do is it's going to be one of those trigger points. We know that dark pool transactions, and we also know that cluster trades occurred at this exact zone. We know that they led on to, of course, sells, and now we have found ourselves back at the same level. And basically what happens here is going to be a reaction. Is Wall Street looking to push to the next main equilibrium point, or is Wall Street looking to sell this rally again on concerns of whatever reason? Could it be to do with yields? Could it be to do with credit default swaps? Those types of things. All of those are relevant. As you'll see later on today's video, we still have a problem in the options market where, the differential in the options and bonds seems to be continuing to rise again. And that's often been an early warning sign of both pullbacks and also a great sign when it goes reverse to that, to buying the dip. And so far, that's been incredibly good for the last 2 to 3 years. So we'll look at that in a moment. Nvidia 140 is the call wall at the moment. We're trading at 135, which was last week's call wall. And Tesla is well and truly through it. Driven, I would say, on hype of course, those robots. If you haven't seen the video right now of them dancing and doing tasks and all sorts of things, then you probably haven't seen why Tesla in some ways is moving through. I've also heard that Elon's getting angry again, which means that he's getting fiery in terms of running the company. And this is clearly an absolute wall of calls, creating a positive gamma event. So far, so good in terms of seeing some strength here out of Tesla. And obviously, a lot of traders will be rejoicing on that because what's the next level? You see it, 400. As we've said, markets like to move from equilibrium to equilibrium. And sometimes Tesla can do whatever the hell it wants, even if the markets do sell off. But for now, breaking 350, pretty big thing. Generally is lining up with that kind of 400 target. Hopefully that can happen for the people that are looking for it. VIX volatility spiked. We were looking for a secondary spike after that huge rally. We've talked a lot about secondary spikes being very common. Is this it? Short-lived. EU 50% tariff next day. EU not 50% tariff paused. We'll talk about it and we'll see how it goes. Well, that's the nature of the market in 2025. And obviously we see a bounce here and we see a bit of a drop off in the VIX. And more importantly than that probably is the options spread differentials, which spiked and have yet to come back down. Now, when we see these spread increases, it often means risk on. Risk off, I mean. In this case, it's a huge sign of generally something getting a little bit nasty in the markets. We saw this happen middle and late of Feb, and obviously that led on to further selling. And we've seen it during some of the biggest periods of time of selling over the last couple of years. Most notably, of course, the February period of 23, and of course the September selling of 23 as well, along with that August sell-off, July-August sell-off of 24. So could we be heading for that again? We'll have to keep watching. But if this keeps rising and the markets keep stabilizing around this level, that is not a good sign for the bulls for at least the temporary period. Why? Yields. Yeah, we're seeing credit default swaps rise, but every time this yield goes past 5, it seems to trigger an event, usually from Trump himself, causing these to often spike down. We saw this back over here, and we, of course, have seen it once again. We're currently trading under 5%, but yeah, it's starting to creep back up again. So, of course, it's something we have to watch. US yields did drive a little bit lower, but the dollar has hit that kind of temporary support for now. Managed to just hold that weekly 99 level on the close, and it's bouncing. Now, where is it going to have problems? Well, the most notable one is the resistance here at 99.96, and obviously we'll be watching this very closely, because if the dollar changes trend, which is currently down on this time frame, then all of a sudden you could be seeing a little bit of pressure coming in on certain pairs against the dollar as well. Speaking of a pair that has been coming under small pressure last couple of days, gold is currently on support, and you can see here it's trading around 3,300 an ounce, which is still kind of a buy zone or area, and it's currently looking a little nasty with these weak rejections. But of course, if you see something like this, yeah, it's going to be a great day trade. So we're currently watching it very closely. It's on support, nasty looking candles, but what hasn't been as nasty is probably silver, which dropped during the open of this week, but quickly rebalanced. Can it get finally through 33.70? It's already cleared 33.20 and then move up to 34.50. Just remember, silver needs to be one that we watch this year. And the main reason is if it can get through that 34.50 zone, if you scroll across here to the left-hand side, you might be able to see that there are some serious rallies that have occurred in the past with silver at these levels. The 1970s, and of course, that 2010-11 area. It's been a long time for silver to come, but at this stage, silver gold obviously looking pretty decent. Now, we've already marked out what our thoughts were on Tesla if it was to break to the upside. So for now, we've seen a kind of similar move tree. We've had the first initial rally, the second rally, and the third rally. And obviously, Elliott wave traders will love these pullbacks being very similar. And they, of course, will love these movements because 400 is the obvious target, with a pretty strong close there near the end of the day, signaling that maybe the market is feeling good about the confidence of Elon Musk coming back a little bit here, and also everything that's going on with those robots. Nvidia, what's happening here? 135, 135, 135. This is notoriously a sell candle. So, of course, Trump has kind of reversed that at this stage, but we do find ourselves at the NASDAQ resistance. So this is one of those key areas that we must be focusing on. Now, if we clear 137.50, you've got to think the next market move is going to be quite heavily up. We're going to then hopefully move into the 150s. And if you're bullish on Nvidia and you're bullish on the stocks at the moment, of course, there are not really any bad signs yet that say, wow, this is absolutely over. Yeah, we've got credit default swap problems, but they tend to manifest later on. And at the moment, we've got every thrust you can think of under the sun, including Zway, DeGraff, and 7070, which you guys know on this channel we do like, and we tend to look for them to be pretty good for 3, 6, maybe even 9 months. Semiconductors versus SPY, bit of risk on coming in over the last 24 hours, and stocks like Apple remain at those kind of key levels if you are willing to take some form of risk, I guess, on these mag stocks. You can also see Google, which is one of our favorites at the moment, continuing that upward trend and still very cheap on paper anyway, which we've done some detailed analysis on in terms of the fundamentals. Chinese stocks, a little bit of decline, still in that kind of chop, what we would call kind of the dull market area. So obviously a bit of a dull market here in terms of Chinese and tech stocks over there. Some concerns over PDD over the last 24 hours, not doing very well. And of course, there are still some problems with all of these cheaper, I guess, export businesses from China. They're struggling in the tariff concepts that we currently have, especially with the Americans' biggest consumer. You guys just not purchasing them because they're too expensive. Let's be real. Tariff 30%, not the best on those types of things. You're going to buy them somewhere else or buy something else. US 2000 recovered back up after concerns of course, the tariff kind of dissipated on Europe. But you can see here again, they're all facing off on these resistance levels. There is a good price though. At 21.20, it becomes much more interesting to actually be bullish on US 2K than some of the rest of the market. That's where you're going to get that broad-based flow come back in. Just remember, on this channel, we always have that abundance mindset. There's always another opportunity out there, whether it be a Tesla or it be a PLTR or it be an S&P 500 trade or gold or silver. There's always something else that's interesting and exciting in these markets. Now, when it comes to the Qs, you guys can see here the NASDAQ has hit back into that temporary resistance. It did so with some serious force. It's selling a little bit here in the pre-market, but realistically, that's not that much, or post-market. But you can again see this big sell-off candle that occurred during that session. And this is where the clusters are. So if you looked at this on paper, you would say this market's probably going up. It's going to break a new high. But we do know that this is the most important resistance level. And if we breach this, then it really strengthens further case scenarios of seeing further strength in the future and for us to go and potentially retest that 537. And people will be scratching their head saying, how's that possible? Well, this is the thing. When markets are moving in that positive gamma situation, they break flows. They can stay, in many ways delusional and longer than people can remain solvent. And that's just the nature of markets. They do this. Remember, watch the flows. Just a few weeks ago, we were thinking that the market might sell off at around these levels down in here. And one of the things that changed our mind on that was just literally price action. I mean, this particular candle here, everything changed. We went, oh crap. And then a few days later, guess what? Bam, there's the US-China trade news. And you get this major movement towards the upside gap, etc. So things change. You've got to remain adaptable to them. At this stage, everything was looking pretty negative. Broke this resistance at the cluster. That's the next level it's going to go to. And then, of course, if it starts to pull back down, really a bear's going to need it to go well underneath that 20,750. And you might ask yourself, how did it even stop here? Well, it's a mixture of Trump's announcements and that little bit of demand. So markets will still hit key levels. It's just that if this level was broken, we're probably going down to 20,050. And that's still a very good area to be angling in on in the future. Bitcoin continues its way up. Some strength coming in here from the crypto markets, all-time highs, still a series of higher highs and higher lows in consolidation at this stage. And what we're seeing is a lot of alts start to fire a little bit. So you can see here that Ethereum, if it's able to break this $20,000 or $2,700 and close, next stop for it could be 3,200. So quite a lot of kick-ups here in Solana, Ethereum, and many other alts. Guys, if you enjoyed today's video, then please remember to subscribe, smash that like button. To summarize at the moment, obviously credit default swaps will need to be continuously watched throughout this year. We will be doing so on this channel. We do have the options market differentials between bonds and risk starting to show an uptick. That is usually a risky sign. And we find ourselves at the dark pool clusters, which basically means that this level here, if bears are going to press, they have to press right here, right now. And this also is one of those gamma switch events. So that means that, again, if markets keep pushing a little bit higher here, we go into positive gamma, and you all know how that works. It starts to squeeze. Probably the bright spots in terms of the stock market at the moment, Tesla's rally, that's a big breakout. That's the type of thing we saw last time when we talked about 280 into 330, 350. So it's kind of continuing on that wall of worry, coming up. And again, it doesn't matter, I think, what your opinion is fundamentally in these markets. It's always just a matter of flow. And on this channel, we're always talking about flow. We're always talking about where Wall Street's biggest positions are. And obviously, we're being adaptable to those changing scenarios. Remember, having a bias too much can be a problem. Hopefully, you're able to navigate these markets. Thanks so much, guys. We'll see you soon. Bye for now.